The range, you have to look for your trading range because your structure can be formed at any random zones, market structure shift, or breakup structure, liquidity, and point of interest. For example, let me give you an example on this current structure that we have in the market and then try to explain. I say after this breakup structure, right, we have two range to work with, which is what this high, this low, and this low, this high. These are two range to work with, this range. So we expect market, if for us to continue selling down, this first break confirm that market is what? Bearish. So that means the range, this new low, and then this high that caused this break of structure is our range. This is our trading range. This break confirm our what structure. Market is selling. Market is bullish because it what is bearish, sorry, because it broke structures. This first break confirm our what structure by giving us a new trading range. Before it broke that structure, we have another structure here. This is the low that got taken out. So we have new structure, which is what these two structures, these two range, this high and this new low. Then we are, well, this is our trading range. This is the range we want to what? Look for to trade. We want to wait for our structure to form at this range. Same thing when we have here. We have another new logo broken out. That means this broke up low confirm our what? Structure, which is what? Still bearish. So we have new range. And our new range is what? The high that caused this structure broken, and then the new low that forms. This is our trading range. So for us to continue selling down, this is the range we're going to talk about. We're going to wait for markets to pull into, and then we sell down. And I said, in this range, you can find your structure formed at any random zones. But you have to know where to sell market from. You have to know that, I said, in a bearish market, you look to sell at an extreme. That means you can either use Fibonacci to look for range, then to sell the market from. Am I recording? Let me see. Am I recording this class? Okay, I am. So these two are the what range that you expect markets to pull into to sell the market continuation. So because of this, you have two range. You might have different structure formed at this your range. What I mean by that is, you see, from your high to your new low, this is your range, right? This is the range we're going to trade with, this range. From this high that caused that break of structure to this what? To this new low that we have. So we expect markets to fall into this range before we continue selling down. And this range is divided into two. We have the premium and the discount. 50% from here above is the what? Premium zone. That means price is at expensive. It's very expensive at this zone. It's much more psychologically and technically. Technically, this is where you should be expecting to sell the market from. And from here to the 50% down, this is priced at what? Very discount zone, which is very cheap. This is where you'll be expecting to buy a market from. This is your trading range. But because of, you know that market is currently bearish, so you want to look for sales. So just because market is bearish, that doesn't mean I'll be looking for sales at a very discount zone. Inside this zone, I might have my structure formed right here. I can have, okay, break of structure, and then market give me liquidity, and then take out the low of the liquidity, and I use this to sell from. You see, you can have the same thing formed inside this discount zone. Your structure, your trading structure has pumped inside this your discount zone. You have the breakup structure, the liquidity, and then your point of interest if you trade S&C, right? So that means you have your structure formed at this zone. And still, because you're in a discount zone where you should not be looking for sales, even though overall is bearish, you should not be looking for sales here. Why? Because of your trading structure formed at this zone, that does not mean it's a range you should be looking for buys. Because price at a very discount zone, that means things is very cheap. A lot of investors would be looking to buy at this zone. That's when you'll be looking for what? To buy your market at this extreme zone. This zone is part of your trading range, but it's much more expensive. Sellers are waiting from these zones to continue selling down because they expect markets to come to this cheaper price because there's suppliers they want to sell. They want markets to come back to the supply zone and expect to continue selling. They will not be selling at a cheaper price from here. So I want to sell the thing at an expensive price. Here, let's say this price of gold is 3,000 at this zone, and then here is at 4,000. I will not be looking to sell from here. I'll be expecting markets to pull into to be a bit expensive so that I'll have much more profits. So I'm be expecting markets to come into this premium zone, which price is going to be expensive at this zone. Then I'll be looking to sell from this zone. It's just this. You have to know this logic. Not like only mathematics or logic. This is technical. This is pure fundamental. This is how this smart money trades. Even if you have a trading range, you have a structure, breakup structure to confirm your structures, then you look for range to trade with. For example, you see, after we have this good new range, let me try to remove this thing so that I can explain to you guys, can understand very well. Okay, what do we look for first? A break to the downside. We talked about bidirectional bias, so you know what I meant. To confirm our structure, we have this structure break. That means we have a range to work with. From this high to this low, this is our range. Then we divide this range into two, freemium and discounts. So this half of this range now is our what? Discount zone, which is what we should be avoiding if we want to sell. We don't want to sell as a what? Discount zone. We will not be looking to sell as a discount zone. And then the half is our extreme zone. This half is our what? Extreme zone. We should be looking to sell and not to buy at this zone. So we know that we have a trading range now. These two range, because we have a trading range and then we have two zones we can forcibly look for sales and buy. Then we combine these two zones from supply to our demand. Those two range now. The premium range, which is what this one, when market is expensive, this is where we should be expecting a what? A sell. Let me. This is our premium zone. This zone. Sorry. This is our premium zone where we expect markets to what? And this is our what? Discount. This is our discount zone. So we know that we have two zones. This is premium. If we are to sell market, we have to wait for markets to come to premium zone to sell. This is how investors should go. If we are to buy, we have to look for markets to come to a discount zone to buy from. That does not mean even if we have our structure at a discount zone, we will not be looking for sales. At least we want to see market come to a premium zone before we look for sales. But we can look for say buys at a discount zone. This is how investors invest their money inside this market. So since because we have a range, we have a range, then we mark the range that we're going to talk about, only going to trade. So we delete the range. This premium, we don't want to sell at this range. So we expect markets to come to this premium range for us to what? To look for sales. This is where we expect our structure to form before we look for sales. Let me mark this so that we know what I meant. You can use Fibonacci to look for the range, or you can use your technical by looking at it. You can determine the ranges. You don't have to look some other tools to know the range. You just have to know your high and your low. Between 50%, you're in discount zone. You're in a premium zone, and then 50% down below, you're in a discount range. So now we have a trading range. We have to at least wait for markets to come into this zone and our range, then we look for sales. So our structure can be formed inside this discount range, and we're still going to get stopped out because we're trying to sell market at a discount price where investors are looking to buy the market instead of selling. So for example, you see at that zone, you have an order block. A lot of people will be looking to sell the market at this order block because of what? They have breakup structure. Even safe double breakup structure from here. You have double breakup structure. But you're inside a what? Discount zone. You're inside the discount range. Market has a lot of way. Market is never wrong. It's you as a trader that you lack patience and then you don't trade about the range. So you see, you have double breakup structure because you don't have liquidity. Sometimes you have inducements. Like this one, I don't consider it inducement, but also it's a liquidity. You can see it much more clear in lower time frame. Let me go to like 30-minute time frame. Sometimes you might have all of your confluence at that zone. At that zone, you see, this one you can consider it a liquidity, which I don't consider it a liquidity because I give you the reason why. You can consider this one also as a liquidity. Your first pullback after you got taken out this stock. So the loss of investors will be a lot of traders, especially retail traders, because they're the one that only want to have a quick money. So they'll be looking to sell at this zone because they have their structure formed. But they don't know that they're in a what discount range. This is a very expensive, this is a very cheap zones to buy to sell market from. You should be looking for buys at this zone. So you see, you sell to markets and then markets stop you out. The only way you can avoid stopped out is what? Your stop loss should be at your invalidation zones. Where is your invalidation zone? This your high, your new range high. If market take out this high, you know that this is your invalidation zones. For markets to continue selling down, you should not take out this high. This is your protected high. This is your protected high. So for markets to continue selling down, you should not take out this high. So if you want to be protected from stopped out, your stop loss should be above that high because this is your invalidation zone. So you see, you have a very big stop loss. You trade like the other someone trade. I just remember someone that trade like this 1-to-1. So unless you can do something like that, that means you're still trading inside a discount zone. You're trying to sell the market in a discount zone and you're stopped out. Okay, people will start questioning, okay, market is still bearish and then I get stopped out. Market is still bearish and I have my structure and then I got stopped out. Why? Then you started saying market is this thing, market is always, you try treating trading as a gambling or anything because you don't understand how investors invest the money. They don't care about your structure. You have to combine your structure with a range. And that range is what will determine your range trading range. So you see, you go your structure formed at a discount zone, as a discount zone. And why you trying to sell market at a discount? Because you're trying to sell the market. I say if you want to sell the market, you look for sales at the premium zones, no discounts. And you're trying to sell it at a discount zone because you got your structure formed. Your trading structure is formed at that discount zone. So you're still going to get stopped out because you're trying to sell market at where people are trying to buy, which is very discounts. A lot of investors will be looking to buy from here because it's very cheap. You should be waiting for market to come into your trading range. Your trading range is supply zone, is your premium zone if you're selling. And then your trading range is what? Discount zone if market is bullish. That's it. It's not harder than this. Then you wait for your structure. You see, you try to sell at the discount zone and you got stopped out. Then you look for what? Your trading range, rest of the 50%, which is your what? Premium zone. If you have your structure at that premium zone, it's fine. If you don't, look for supply zone and sell the market. I have supply zone here. And this is my invalidation zone. This high is my invalidation zone. So I can still sell from here. I can still be profitable because if I am to sell, my stop loss should be at this what? Invalidation zone. And then I target the new low I say market take out. So you see, this is 1 to 4R. This is quite decent. Or you can look for your trading structure at that zone. What is your trading structure? It depends on the strategy you trade. I teach you how an SMC strategy. So we look for what? Structure shift, liquidity, and then point of interest that is close to our liquidity. So if we marked our structure right here, let's mark it together. This is the low that we expect markets to take out. This is the break of low that we have, right? Then our first pullback as our liquidity. Then our point of interest. I use the breaker block. This is closest to our liquidity. So you see, you have your structure formed inside your trading range. Inside your trading range. Then you wait for another range to come from, to form your new trading range, right? So let me go to one hour. Where is the zone? Okay. Then I have a new trading range. Where is it? This low that got taken out, right? This confirm me my structure shift. my structural confirmation. This low, when low, this low got taken out. That confirmed my what? My direction. Market is still bearish. So that means I'll have a new working range. Where at this range, I'll mark the low and then the high. These are the two range I have to trade with. This is the two range from here to this zone. This is my range. Then I combine these two range to discount and what? And freemium range. Then I'll be looking to sell at freemium. That's all of it. That's all what you should be looking for. So if to me, like, let's say I want to sell the continuation because market tapped into this range and started selling down. So if for me to catch the continuation of this low before this new structure got broken out, I know that, okay, market respected my structure at a premium zone. And then our target is what? This low. So before market take out this low, I can still look forward more sales continuation until market take out this low. Because I know that the purpose of this selling now, because market pulled into a range and started selling down, I know this is the target, overall target. Until market take out this overall target, I still going to work with that old range that I have, which is this range. So let's say market did not respect this one. I still have a range. Until market take out this high, which is my invalidation area, I'm not going to look for anything else. I'm still bearish. So I can look for continuation of sales until market take out this low. If market couldn't take out this low, I know it's going to target the high. And when market target the high, take out the high, we know that I have a structural shift again. So this is simpler than this. You don't, even your bias, even for your bias, you don't have to go to some time frame. You can only use lower time frame bias. Is also, you can use 1 day. If you're swing trader, you can use weekly for your bias. That means you have a trading range first. Then you look for what? Your discount and premium zone. How do you find your trading range? By breaking structure. Market breaks structure, a high or a low. So that means if you break the structure, then you mark the high that caused the what? The break of structure. Then you mark the new low. Like this one, you see, I marked the high that caused this low got broken out. I marked this high that broke this low. So, and I marked the new low. This is my trading range. So if for me to continue selling, this is my trading range. But I can still look for sales at that zone because market started selling down at this discount zone. And I know that my bias is bearish. If I did not catch this buy, I can still look for sales. And my target is to be this zone. So anywhere I look for sales, because market has already started selling from a premium zone. So if I sell from this zone, it's still there because the target is to take out this low. So I can look for more sales until market take out that low. I can look for more sales. So market tapped into this zone. Okay, I expect this, if I use this as my bias, because I'm expecting market to tap into a higher time frame key level. Market tap into this 1 hour order block. Then I'll look for another structure to form at that my 1 hour. What is it? My structure, my trading structure. Okay, I have break of structure, this as my first pullback, and then I have another breakout block right here. You can go to 15-minute or lower time frame to look for value structure, the one you can read. So look at this. You have this logo sticking out. Market pull to give you liquidity, this one as your inducement, and then market use this breakout block. Your invalidation zone for this breakout block is the high of the breakout block, this zone. So I can still continue selling down, and my target is what? This low. Everything, this range now, I know that my bias now, if I'm trading lower time frame, my bias now is what? This 4 hour breakout block. Market tap into it and started selling down. So I can look for this as my confirmation entry. But if you trade that 4 hour time frame, you know that, okay, you're only waiting for markets to come. You see, you have two structures in different time frame. That your structure formed in higher time frame, which is your 4 hour, 2 hour bias. And then if you trade lower than that, then you expect another structure to form. So that means you have a trading range, you have your structure formed at a specific range, which can be a premium or discount zone. If I'm looking to sell, I want to sell at discount, at premium. I don't want to sell at discount. Same thing when market is bullish and I want to sell at what? Premium zones. So you see that it's not always about your structure. Your structure can be formed at a random zones. But you just have to know that the range. You have to know the range, your high and a low. Look for the range. Divide that your range into two. You have premium and discount zone. So the same thing happened. That's how we expect to sell down. So I know, and I said I don't need to talk about your structure marks, how to validate your structure, because you know that market respect structures. This is what we've been talking about for almost 3 weeks now. So after this, we know that, okay, you marked your structure. Let's say you haven't been trading for a very long time. Let's say gold is somewhere around this zone. You cannot just be jumping in and starting selling down because you see market is selling. You look for previous range, you marked. You look for efficient market, you marked them all the way to the zone. That's how you call multi-time frame analysis. Market was selling down. Yes, market is selling. I will not just be looking for sales from here because I might have a zone that market a range that market has not tested. And let's say market is targeting this range before continue selling down. And I just jump in and started looking for sell here. I need to mark my range. First, how do I mark my range? I mark structure to confirm my structure shift. But I need to see market coming from a zone, which we talked about that. I don't want to go back to this. So I said the first thing, confirm a structure. Are we bullish or bearish? If it's bearish, we need to take out a low. This is the low, major low that market broke. So know that we still bearish. That's how we are. So then from here, we look for our range, trading range. Trading range started from the high that take out the low and then the new low that we have. So this is where we expect markets to pull into before we continue selling down. And then we divide these two range into premium and and discounts. 50% of it is premium, is discount, and then the 50% of this range is discount range. Sorry, let me. So we have two range to work with, and these two range we have two zones, the premium zones and then the discount zones. We're trying to sell, so we only sell from discount zone, from premium zones, right? So one thing we did is we confirm our structure, which is bearish. Then we look our structure to forms at the premium zones. What our structure? What's our structures? Our structure is SLP. We use SLP structures, which is in a short, which is the part of strategy we trade. SLP is, I use only SLP as your entry. Do you understand? We use SLP as entry, and that SLP, we're not going to use it at any random zones. We said if you're looking to sell, we'll be looking to see that structure formed at a discount zone, as a premium zone. So we look for break of structure, best pullback as our liquidity, and then we have 2 points of interest, and all of them are from discount zone, premium zone, this breaker block and this order block. Based on the guideline we use the one that is closest to our inducement liquidity. But if this one is close to our inducement liquidity, but it's inside discount range, we're not going to use it, even though it's closest to our liquidity. That's how people fail most of the time, because because it's not always, as I said, it's not always POI closest to liquidity. You will have POI that is close to your liquidity, but it's at discount zone. You should not be looking for sales. So if you know your range from this one to this one, this is your range, this high to this high. You look for 50% of this range, this is the 50%. Let me try. Okay. This is the 50%. So anything below your 50%, market is very cheap. You're in discount zone. Anything below this, from here to here, you know that market is is in the discount zone. So you should not be looking for sales at these zones. But you see, your breaker block and your order block are in premium zones, which is they're expensive. So these are two valid POI you can use to. So that's when you look for the POI that's closest to your liquidity, because they're all in the premium zones. So if they say this breaker block is in discount zone, you will not be looking to sell from that breaker block because it closes to liquidity. It's not always about that. I've talked this one, no one, not twice. So that's what we'll be looking for, your range. You look for range, and then you see market respecting that structure. That's what we call validation. That's what we call efficiency of the market. So let's say I'm trying to trade this range now. From here, market is currently at this range. Before I look to sell at this range, I need to go back to previous range, look for efficiency of the market. That efficiency is what? Market selling from a premium zone and continue selling down. Any POI that we have is not from premium. Let's say market sell from here, from this breaker block bar, but this breaker block is in discount zone. So we know that we have a POI that is what? In a what? In a new zone that market has not used. In a premium that market has not used. So still, even if market is here, market can pull all the way to this zone again and sell down. And I'm still bearish. Why? Because this zone is a valid zone for sellers to come into, and it's still inside the range. So I want to trade this range. Before I do that, I need to see market respective ranges and then respecting structures before I look for anything here. I cannot just jump in and start looking for sell at this one. I need to know the previous range. That will help me know the current range. How do I mark my previous range? That will help me know the current range. How do I mark my previous range? Mute yourself.
Okay. So, Mr. Zax.
Yes. Let me finish first.
Yeah, Mr. Zax. So, okay.
Let me finish first. We said before I started trading this zone, I need to look for previous zones, see my range, the zone that market has not full into because they're in premium, and then the zone that market used before selling down. So my first range, after break of structure, I look for liquidity, and then I market sold from this POI that is inside my premium zone. Okay, I have a valid market is sufficient now. There's not any insufficient. Why is that? Because market sold from a premium zone. I think the market has not tapped any zone, let's say. After this, market just did not take out any inducement, or it take out inducement and did not sell from any premium. Let's say it only sell from discounts. So I know that, okay, I have new zones to work with. I have this zone, I will mark this zone. I'm expecting markets to come out full into because it's part of my range. This is where I'm expecting sales to come from, and it has not. Then I'll look for new range now. Market sell from a premium, okay, market respect structures. That means I'm still bearish. So I look for new range now. What is my new range? Market to take out this low to confirm my trend. So market take out this low. Then I'll look for what? The new range I have. What is my new range? This high that cause this low, and then the new low. So now I have another trading range. Then I'll do a analysis inside that range. That range from this high to this new low. This is my range. Then I'll look for markets to pull into a premium zone and sell down. Then before I look another range, right? So after market tapped into this one, I know that, okay, where is my premium and discount? I divide it into two, or I can use Fibonacci. I will show you how you can use Fibonacci and the settings you can use. So based on that, I want to see my structure formed at a premium zone for me to sell. What are my structures? Based on this, we have our structure formed, our SLP structure for entry. We use SLP for entry, breakup structure, and then liquidity. And then point of interest that is closest to our liquidity, which is what this breaker block. Okay, market has tapped into that. That means market has not left any imbalance in here. Market does not leave imbalance here. Then I look for new range. What is my new range? This high, the first thing I want to do is confirm my structure, right? My structure has to break this low to confirm I'm still bearish. So I break this low, I'm still bearish. Then I look for my new structure, this high, and then this new low. That means I have a range now to work with. If I am to sell, I have this range to work with. Then I'll divide these two range into premium and discounts. This is premium and discounts. Let me see. So I have two range to work with. I want to sell. I want to see market tapped into this premium zone before I sell. So this is my trading range. Then I look for my structure at that premium zones. So you see, if let me show you something. You see, at this zone, market is at premium discount, right? So if you look, you can see structural shift at this zone. Market structural shift, right?
Yeah.
Let's pull back as your liquidity. And then you have this order block right here that is in between your discount and premium. So I'm not going to sell the market from this zone. Why? Because of two reasons. First of all, market is still cheap. Market is still what? At cheaper price at a discount level. This is a good zone. A lot of traders will be looking to sell gold from this zone, which I'm not going to sell. Reason is because if you mark this as your structural shift, then this is your liquidity. And then price is at premium zone, discount zone, which is one of the confluence I'm not going to trade the market from here. The second of all is I don't use this low as a breakup structure. I use this internal low. Let me show you this. I use this low as my structural shift low, this one. So this is where I marked my low. A lot of people consider this as a sweep, this high. They consider it as a sweep. Okay, this low only sweep this high, so they don't consider it as a breakup structure. But for me now, I say if it's half time frame, I consider this as a breakup structure, right? So this is my breakup structure. So this would be my low. This should be the low I'm expecting structure shift to happen. So after this low got taken out with a week, still I consider it a breakup structure because of the confluence I talked to you guys. And then this high of this order block would be as my liquidity. And then I'll look for what? A bullish zone at this premium zone, which is what? I have the order block right here. So this is why I'm expecting to sell. This is why I'm selling gold from. This is why I'm selling gold from this zone for next week, where I'm selling gold. I'm not selling.
You already answered my question because you saw where we had the previous before this last break of structure, right?
Yes.
Before this current last break of structure.
Yes.
Where we had the previous high, because as I'm looking, the high did not give you a new low.
Yes.
Instead, it is this the high that has the sweep. That gives you the new low, as you said. If we are considering the internal breakup structure.
Yes, correct.
If we're considering the internal breakup structure rather.
Yeah, because the reason is you see market tapped into this supply zone and sold from there. This low tapped into that supply zone and sold from there. So we know that market does not leave any inefficiency back of there. So we know that we consider a structural shift after we tapped into that zone. Same thing I see here. Same thing I do here. You see, market tapped into this zone. Then I'll look for structural shift to happen. Market structural shift. If I'm to trade continuation, after market tapped into this, my supply zone, right? Then I'll look for new structural shift to happen before I continue selling down. A structural shift, market break this low, give me like this low as an inducement, and then use this order block and then sell down. This is for my continuation sell. Do you understand? Still at this zone. Look at this. Still at this zone. Market tapped into this high time frame POI, which is the 4-hour order block, which is tally with 1 day order block, right? Give me structural shifts, my liquidity, and then point of interest that is closest to liquidity for my confirmation. But I'm trading high time frames. That's why I said you have to wait for high time frame structure to form, which is very valid. For us to confirm that, we have to wait for new structure to form, which is what this low got taken out, right? It got taken out, gave us liquidity, and then tap into the supply zone. You see, we follow the market structure to read what market is printing at the moment before we look for any more sales at the market. So you see, we use range to determine.
These are so many.
We use range to determine.
No, I was saying that.
What was it?
I was saying that these are so many entry positions, especially on continuation. When market is
in a current range.
Trending.
Yes, market is trending. So you see, all of this, we look for sell and buy in a range. We use range to determine where we said we can have different, like this one. You'll not be looking for sell at this one based on what you learn on this class, because it's inside your premium zone, it's inside discount zone, and you should not be looking for discount zone. That means this is invalid. You should not be looking at sales at this breaker block, this new breaker block, because it's inside you have two range to work with, right? That high, and then this your new low. So you see, you have this one. You have this breaker block that is inside this your range. And then if you mark the range, that breaker block is not in premium. It's not in premium. It's in discount label. It's in discount label. Still, it's going to fail because of what I just taught you guys. So you know that, okay, I will not be looking for, because this breaker block is in premium. And if you see there, you still have your structure, your breakup structure, your liquidity, this as your first pullback. And market come and take out the liquidity and then come to that zone and still did not respect it, right? It's because of this range. So this is where I'm selling gold. So you see, if market did not respect this zone, so there's not any possible zone for me to sell gold from here, because all of this zone has been mitigated. Market is sufficient. It did not leave any insufficient. Let's say I have a zone that market has not used in higher time frame, this one. So I know that I have an inefficiency that market wants to peel. Market can still come back to that zone and start selling down. But because of this zone, all of this zone has been efficient. Market has used them. There's no way, if market does not respect this zone, I'll be looking for buys. I'll be looking for sales. But overall, I'm still bearish.